In this video, we will look at what is systematic trading or investing, and we'll also look at the opposite style of trading, which is called as discretionary investing or trading. And we'll also look at two examples of a systematic approach to investing or trading. So first, let's look at what is systematic trading or investing. Systematic trading or investing is nothing but a rules-based approach to trading. So everything is governed by rules. So what do we mean by rules? So when do we enter the markets, when do we stay away from the markets, and what companies or what assets to buy and how much to buy them, and when to sell for a profit or when to book a loss is all governed by a set of rules. So as the name says, systematic means it is a rules based or a systematic way of buying or constructing your portfolio. So now let us look at the opposite style of investing, which is called as discretionary trading or investing. So what is the opposite of a rules based? So the opposite of a rules based is nothing but where it's a discretionary system where the decisions are based on humans choice or humans discretion. So these are not governed by any rules. So let us look at some of the examples or some of the styles of discretionary trading or investing. So some of them are chart patterns or fundamental analysis or any style of trading in which it is not based on a set of rules is called as a discretionary trading or investing. So it could be the case where three traders could be looking at the same chart patterns or the same set of fundamental analysis data like the cash flow statements or the sales forecast and all those things, and they could come up with three different opinions because it is based on their discretion. Like the way they look at it could be different. Though they are looking at the same data, same chart patterns, they could come to different conclusions because it is not defined by a rule. It is based on their discretion. So these are and one of the main disadvantage of this kind of discretionary system is that it is prone to bias. People tend to fall in love with the company that they are analyzing. They have some sunk cost fallacies, like because they have spent so much time in analyzing, they tend to have some kind of bias towards those companies. So all these biases won't be there in a systematic trading because everything is governed by rules. The entry rules, when do you have to be a participant in the market, when do you have to stay away from the market, everything is defined by a set of rules. Are defined by a set of rules. Now let us look at some examples, a couple of examples of a systematic approach. One of the most simplest systematic approach is the index investing or index way of index ETFs or index mutual funds that tracks the index. So in this, what we are doing is that we are going to, the rules are to track the index. I'll just make it. Yeah, the rules are to track the index. There are multiple indices like S&P 500 index, which are the 500 biggest companies in the US. ASX 200 is the 200 largest companies in the Australian Stock Exchange. Nifty 50 is the 50 largest companies in the NSE, which is the Indian Stock Exchange Board. So now what the index does is, the index funds or the index strategy just merely tracks the S&P the respective index. So whenever there are changes within the index, now within the index changes over a period of time. Like some of the companies within the index tend to get bigger and stay in the index, and once they become smaller and then they are removed from the index and then replaced by a newer entrance into the index. So now our systematic approach is to just replicate the index. So there are some variants in this index investing as well. Like the usual style is to replicate the actual index itself. So the larger the company, the more weight they would receive in the strategy. But there are also variants like equal weight. What do we mean by equal weight is that, suppose let's take the example of Nifty 50. We will be having 50 constituents of the in an equal weight strategy. All these 50 constituents are given an equal weight, but in the traditional index, the weightage is dependent upon their market cap. Like bigger companies get bigger weight, and smaller companies receive smaller weights. So this is one example, or one of the most simplest form of systematic investing or trading is the index tracking or the index investing. Another let's look at another example, or another example for systematic trading, systematic investing, is the 52-week high strategy. So what do we mean by 52-week highs? It's the yearly highs. So in a year there are 52 weeks, and companies that are hitting fresh 52-week highs are considered as the criteria for buying those companies. So it can be like this 52-week high can be considered as a momentum strategy or like a trend following strategy, because as the company hits fresh 52-week highs, like, so the entry criteria is to buy companies that are hitting fresh 52-week highs, and the exit criteria could be that once the company's price closes 30% below the highest high value, that could be considered as an exit criteria. In this case, we would be exiting for a profit, and there could be a case where not all the entrants that are hitting 52-week highs continue to make newer highs the next year or the following year. So there would be some companies that would hit fresh 52-week highs, but then they would drop down, or the momentum would go down, and then they would fall out. So in that case, we would have a definite stop loss of saying around 30% stop loss. So these are some of the, so as you can see from these two styles, where index investing and 52-week high, which is a momentum strategy, the rules for buying are all predefined. The rules for exit are all predefined. So whenever they look at the same set of rules, where if there could be 3 or 4 traders or investors who could look at these index, and the rules governing them are the same. So this is an example of systematic investing or trading. Hope you found some value in this video. Follow and subscribe this channel for more insights and more videos on systematic trading and investing.